It's official. I am buying more SoFi shares. This is a stock that's a top 3 holding for me. And it's also a stock that I stopped buying in July of last year, July of 2023, but I actually just started buying again at the very end of January of 2024. I want to talk about why I'm buying more, and I'm going to take this opportunity to talk about how I think about building a position inside of my accounts. So we're going to talk about what prices I've been buying at, how long I plan on continuing to buy SoFi, and where I see SoFi going over the course of 2024. But before we get into all that, if you're new here, I'm Austin. I'm a co-owner of cloudmusicsuite.com. I'm also a stock market investor. And as I already mentioned, most importantly for this video, I'm a SoFi shareholder, okay? If you're already subscribed and you're back on the channel, thank you so much for being one of those 3,000 something subscribers. We just hit that goal last week. If you're not subscribed, go ahead and click that subscribe button and drop a like on the video for me while you're at it. Helps out the channel in a massive way. Thank you so much for doing that. Let's jump into the video. So SoFi stock is a stock that I stopped buying in July of last year. I believed that 2023 was the last time I would ever be able to pick up shares for those kind of prices. Throughout 2023, I've got all kinds of purchases in the $5 range, purchases in the $4 range, back up to the $6 range, $7 range, even a little bit in the $8 range I was buying in June of 2023. And like I said, I believed that SoFi was absolutely done being at those $6, $7, $8 range for literally forever. I felt like we were about to hit profits at the end of 2024 and we were going to be up and away to the moon, and there was no slowing down. With the Fed fears of being higher for longer, that's been hurting SoFi and all bank-related stocks in the short term, and it's going to keep those stocks low for a little while. Fed is probably going to keep rates higher for longer and keep on the quantitative tightening cycle. But what that's allowed me to do is pick up even more shares of SoFi that I thought I would never be able to pick up again at those prices, in a position where SoFi's fundamentals are way better than they were when I was buying even just back in June. And the main reason for that is that SoFi actually recorded their first ever quarter of GAAP profit, okay? So they have GAAP EPS for the first time, and they guided that every year, 2024, 2025, and 2026 was what they gave guidance on, was going to be GAAP profitable, and those GAAP profit numbers are going to be growing insanely all the way up to the 55 cent to 80 cent per share range by 2026. I'll talk a little bit more about that later and what that means as it relates to forward PE, but the fact that this company not only has growth for days, they're diversifying away from loans and more toward financial services and technology platform. Those are the 3 business segments. They're going to have a 50-50 split for full year 2024 in terms of revenue from financial services and technology as 50%, and then lending as 50%. That's great for SoFi. They've got accelerating growth on the tech platform side. Margins are expanding like absolutely crazy. Member growth is insane. Product growth is insane. Total deposit growth is insane. Check out some of these graphs. All-time high after all-time high in members, products, tech platform accounts, revenue, earnings, total deposit growth. The company is firing on all cylinders, man. I'm going to talk about valuations and specifically price to book, and now that I can talk about it, price to earnings ratio. Now that the company has a solid forward PE with solid guidance, we can actually chat through those PE numbers. But first, let me say this. Every single quarter they've reported, I have increased my personal price range that I want to pick up new shares at. If you go back and watch my videos, I would say things like, if the stock drops into the mid to low 6s, I'm going to pick up shares like crazy. And then the next quarter they report, I get more bullish. And I said, hey, if the stock drops to the low 7s or the high 6s, I'm going to be picking up more shares. And then after this quarter they just reported, I said, hey, I'll be picking up more shares if the stock drops to the mid 7s or maybe even the high 7s. And that's exactly what I did. So I had so much confidence in the management team that they were going to come through and report an absolutely amazing quarter in Q4 of 2023. And they did. But I had so much confidence in that on the 24th of January, I actually started buying more shares. $7.71, $7.61. That was in the same day. Next day, $7.65. And I took a little bit off after earnings, $7.75, $7.65, $7.56, $7.68, $7.47, $7.50. I even bought in the $8 range, $8.12, and then my most recent purchase was $7.88. That was today. The stock's sitting right around the $8 range, and I think this is disgustingly undervalued for the revenue growth we're getting, for the product growth we're getting, for the member growth we're getting, for the margin expansion we're getting, for the EPS growth we're getting over the next few years. I think this is a steal deal for SoFi. Every single time the stock drops into the 7s, I'm going to be picking up shares that day. I'll probably even pick up some shares if it's in the low 8s, but for sure, 100% fact, if it's hitting 7s in a particular day or week, I am going to be buying shares, and I can guarantee that with absolute certainty. So why do I say this is a steal deal? Why am I so excited to be picking up shares? Let's check out some valuation metrics. First thing I want to look at is price to book. I don't think price to earnings is the most important thing for banks. I think price to book is. And for me to explain all the reasons why price to book is, it would be a whole nother separate 15-minute video. I'll keep it super short. It's a game of cost of funds and yields. So the price to book is determined basically by how well they're able to enhance those spreads. Anyway, the average price to book for United States banks is about 1.28. It depends on when you look at this. It depends on where you find data for this, but 1.28 is the number that comes up a lot of times if you're looking for average US banks price to book value. SoFi is only at 1.55 on the price to book ratio. So that price to book of SoFi is somewhere around 20% higher of the average bank. The average bank also has revenue growth and member growth in the low to mid single digits, okay? Let's remember what SoFi just reported for Q4 of 2023. $615 million, up 35% year over year as it relates to revenue growth. Member growth of 44% and new product adds of 41% increase on a year over year basis. So is SoFi only have about 20% more growth than the average bank? No, they have multiple times more growth than the average bank. For some cases, 10x of the growth for a 20% higher price to book value. If SoFi was trading at a 2 or a 2.25 price to book, I would probably still be picking up shares. But a 1.55 price to book for the kind of growth that they've got, and now the EPS numbers that they've got, and how those EPS numbers are going to be expanding, it is a steal deal on that metric. Now let's talk about another metric. The other metric we're going to talk about is actually on a forward basis, and that's the forward PE. Reason is they just reported their first ever quarter of profit. So their trailing PE is still going to be, indeterminable because they have negative EPS on a trailing basis. But on a forward basis, they guided for somewhere between 7 cents and 8 cents of EPS on a GAAP basis for full year 2024. First thing I got to note about that, I think they're sandbagging those numbers massively. I could easily see SoFi coming in and putting up 10 cents to 15 cents of GAAP EPS for full year 2024. I think they're being way too conservative, and I think they're expecting a lot of turmoil in the economy throughout 2024 that a lot of financial firms are not expecting. Maybe they're right and those things do play out and they end up being somewhere around that 7 or 8 cent range as it relates to full year 2024, but I think they're going to come in and crush that number. They have a history of beating on revenue, beating on EPS literally every single quarter in and quarter out, and they're not going to stop now just because they got to EPS profits. They're going to keep on putting their guidance a little bit below what they're going to hit so they can come in and smash that number. But I'm getting carried away. If we just take the forward PE, right now, stock's at like $7.96. If we divide that by the earnings that are expected for full year 2024, it's about a 100 forward PE. That might sound absolutely ridiculous to a value investor, but someone who's a growth investor, if you've owned any growth names, you know that that's not crazy when a company is flipping the profitability corner. I'm a shareholder of Tesla, right? I haven't bought a new share since 2020, but regardless, I'm a shareholder of Tesla. Whenever Tesla is flipping that profitability corner, I saw forward PE numbers as high as 5,000, you guys. So a 100 forward PE is really not that bad for the kind of growth that SoFi's got going on. But if we read a little bit more into their most recent earnings release, they say here that in 2026, they expect between 55 cents and 80 cents of GAAP EPS in 2026. We're just going to skip over the year 2025 because we don't have direct guidance for it. We're just going off the data that was given and the guidance that was given. So if they hit that low point, the 55 cents, which I think the odds that they only get 55 cents of EPS in 2026 are unbelievably low. I think they're going to crush that number. But let's just say they hit 55 cents. That's only a forward PE of about 14.5. Some of the biggest banks in the world who have like 1%, 2%, 3%, somewhere around their revenue growth, those stocks are trading at about an 11 or a 12 forward PE when we look out to 2026. For SoFi to only be a little bit above that at a 14.5, steal deal once again. But let's get a little bit more bullish now. If they come in at the upper range, the 80 cent range, which I still believe that's actually too low for SoFi's GAAP EPS numbers for full year 2026, but let's say it's not. Let's say they hit exactly that 80 cents on the upper end of their guidance range. That would be a forward PE of less than 10 when we look at 2026 numbers. This stock is a must buy for me. I'm not telling you to go out there and buy the stock, but if you haven't been picking up new shares and you're already a shareholder, it might be time right now. I'm not sure we're ever going to get these type of valuation numbers with SoFi. I can't believe that we're in the $8 range still, to be totally honest with you. I'm going to be acquiring shares every single week, sometimes every single day of the week. It depends on what other stocks are doing in that week and where I'm going to choose to allocate my funds, but I would say every single week that we drop into the $7 range, I will be picking up shares of SoFi every single time. Now, a lot of people might be curious, how long am I going to be buying SoFi? It all depends how long the stock stays at those lower levels, okay? This is generally how I think about positioning with stocks. If a stock that I like, that I believe in, that has a management team that has their head on straight, and the fundamentals are improving quarter in and quarter out, I'm going to be picking up shares of that company. If it's a valuation I don't like so much, I'm probably not going to be picking up shares of that company. I got a lot of heat for saying I'm not buying more Palantir right now, and I haven't bought Palantir since May of 2023. I don't love the valuation of Palantir anymore. I do love the valuation of SoFi still. It's honestly a better valuation than a lot of those shares I was picking up in June of 2023. It's a fundamentally stronger company. It's a no-brainer for me to buy right now. Yes, it's a top 3 holding for me, but I'll keep picking up shares if it stays in the 7s. If it drops into the low 7s, I'll be picking up shares even heavier. If it rises into the low 8s, mid 8s, I'll start to decrease my buys slowly, but I'll probably keep on nibbling on shares throughout the entire $8 range, and then I'll chill out a little bit once we hit the $9 range. I think if we look out to 2026, SoFi could be one of my biggest gainers in terms of dollar amount and percentage gain that I've ever had in my entire portfolio. This is if the management team keeps on executing. If the fundamentals get worse and the management team starts missing, the story might change a little bit. But as long as they keep on going on the trajectory that they've set and they hit the guidance, even just bare minimum guidance that they set in their Q4 2023 report for 2024, 2025, and 2026, I see this stock having an insanely bright future, not only as a company, but also the stock price, obviously, which is what we want to see as an investor. I can't wait to see this management team keep on executing, keep on diversifying the business, grow the profits in a massive way, grow the tech platform into an absolute beast, grow the financial services into an absolute beast, and become one of the biggest and best banks in America. I believe that's going to happen. I can't wait to see it happen as a shareholder, and I believe all of us SoFi shareholders are going to be rewarded in a massive way over the next 3, 5, 7, 10 years. Let me know down below if you own SoFi shares, what your time horizon is on your SoFi shares, and what you're doing with the stock right now. Are you still picking up shares? Are you chilling out a little bit? What are you doing? I want to hear about it. That's one of my favorite parts of posting here on YouTube, is looking at the comments, having some conversation with you guys down there. I appreciate you being here in a major way. Thank you so much. Have a great night.